So we're now going to do the first 5 journal entries here in the general journal and post this to the general ledger. So here are the first 5 entries. So we'll do January 1, 3, 4, 5, and 6, right? Those are the first 5 journal entries, and we'll make that one video and then we'll continue. So I like to make sure that I have this journal entry handout by my side when I'm doing journal entries. It's very important to use this based on the knowledge that we learn. All right, so here it says ABC Company issued common stock in exchange for cash. So what's being exchanged? ABC Company is giving common stock and ABC Company is receiving cash, right? So they're getting cash, they're giving common stock. When I look at the handout here, cash is an asset. Cash is going up. So what am I going to do to cash? I'm going to debit. Common stock, whenever we issue or give common stock, that is also going up. So when a company sells common stock, it increases the amount of common stock because selling common stock means we have more stock outstanding. So common stock is going up, and that's going to be a credit. So I'm going to debit cash, I'm going to credit common stock. So I'm going to go here, I'm going to debit cash, and I'm going to credit common stock. Okay, and what is the amount? It says $500,000. So the amount is now $500,000. That is steps 1 and 2 of the accounting cycle, right? That's steps 1 and 2. So steps 1 and 2, we analyze the transactions, we record it to the general journal. That's what we just did. Okay, that's steps 1 and 2 of the accounting cycle. Now the next step is to post this to the general ledger, right? Well, what is the general ledger? The general ledger is really just the T account. So now we're going to go to the cash account, we're going to post that. We're going to go to the common stock account and post that. It's really, really simple. So cash, I debited for 500,000. So I go down to current assets where my cash is, and the debit side is the left side, and I put 500,000. And I'm done. That's it. The next is a credit to common stock for 500,000. So common stock is in the equity section, and so you'll have to get familiar with that. So here's equity, January 1st, 500,000 on the credit side, and you're done, right? That's it. So all you're doing is when you post for each account, you go to the T account. If it's a debit, you put it on the left side. If it's a credit, you put it on the right side. All right, let's look at the second entry. So it says on January 3rd, ABC purchased land with cash. So I received land, I give cash, right? How do we journalize that? Land is an asset. I give cash, cash is going down, that's a credit. Land is an asset, land is going up, that's a debit. So I'm debiting land and I'm crediting cash. So I'm gonna go here, right, to 3. I'm gonna debit land, I'm gonna credit cash, and I'm going to do that for the amount of the transaction, which was $50,000. So it said $50,000 over here. So I debit land and I credit cash. And now I go to this is step 1 and 2. I go to step 3. So I go to the land T account. I put this on the left side. I go to the cash T account and I put this on the right side. So let's go down to assets, right? Land is a long-term asset, not a current asset. So here's land, January 3rd. This is going to be on the debit side for $50,000. And that's it. Cash, right? January 3rd for $50,000 on the credit side. So notice, right, you see the first item that we debit, we put it on the first line as a debit, and the first item that we credit, we put it on the first line as a credit. Okay, so that's it. We're done. We finished steps 1 and 2 for that journal entry. All right, let's look at the third one here. On January 4th, ABC purchased a building in exchange for long-term notes payable. So here we're receiving a building and we're not giving cash, but we're giving a notes payable, right? Anytime you see payable, that's a liability. So I'm going to go here, right? And building is an asset. So, building is actually not in here, huh? Land for, oh yeah, there is buildings. Building is an asset. Buildings is going up. So I'm going to debit the asset, right, for buildings. And then what am I giving? I'm giving a notes payable, which is a liability. Is notes payable going to increase? Yes, because I'm borrowing money, right? I'm borrowing a note that increases, and we increase the liability with a credit. So I'm going to debit building, credit notes payable. Okay, so here I go, debit building, credit notes payable, and I'm going to do that for the amount of money, $250,000, which is the amount here. Okay, really simple. So now that I've done that, I go to the building T account. All right, here's my building. That was a debit, so I put it on the debit side. I put the date and the amount on the debit side. Right, I credit notes payable. Notes payable is a liability, so I go to the liability section. Here's liabilities, right? But this is short-term liabilities, current liabilities. I want non-current liabilities or long-term liabilities. This is over here, so I credit it. Okay, so since I debited it on the general journal and credited it on the general journal, now I come to the T accounts and I put it on the respective sides. Okay, so that's 3 journal entries. Let's do 2 more. ABC purchased furniture and fixtures with cash. So it's basically the same entry. Instead of building, now we have furniture and fixtures, right? So I have furniture and fixtures is going up because I purchased it, so I'm going to debit that. And cash is going down because I paid with cash, so I'm going to credit that. So I debit furniture and fixtures and I credit cash for the amount. So here we have $20,000, and where did I get that amount from? It was right here. Okay, and now I post that. So I go down to furniture and fixtures. Here, you see on the debit side, I put the $20,000. I go up to cash on the debit side, and I put the $20,000. Okay, very, very simple. All right, let's look at the next one. For the 6th, it says ABC purchased equipment with cash, basically the same thing. I'm receiving equipment and I'm giving cash, right? So cash is going down, equipment is going up. When I look at the general ledger, the journal entry handout, cash is going down. What do? I credit. Equipment is going up. What do? I debit. All right. So I'm going to debit equipment, credit cash for $100,000. And I'm going to post this. I'm going to go down to equipment. I always like to do the debit first, but you can do it differently, however you want. And then I go to the credit for cash for $100,000. Okay, so that's it. So that's the first 5 journal entries, right? And I'll pause here and I'll continue. We stopped at here, purchase equipment and cash, January 6th, and I'll come back in the next video and I'll continue with the next 5.